Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Jeannette Lowe. Jeannette is a managing director and Washington research analyst at the firm, and we're going to talk all things Washington policy in DC. But first, Jeannette, how are you doing today?
I'm doing well, Ross. How are you?
I'm doing really well. Thanks for checking in. A lot to talk about here. We actually recently put out a note from you and your team about the geopolitical situation abroad. So I thought we could use this venue to talk about the domestic political situation at home. Since we last spoken, we have a new Speaker of the House, but you all have kind of long been talking about this fight as more of a proxy for spending in Congress and at the federal level. So I wondered if I could turn it over to you and get your update on that view and how things might develop from here.
Absolutely. So we had about a 3-week fight to find a new speaker. We went through a couple of candidates, and as you said, that was kind of showed where the caucus is in terms of also looking at spending, as we still have a budget that needs to be done for fiscal year 2024. You have the president who has put forward a $106 billion national security supplemental budget request to provide aid to Israel, to Ukraine, to Taiwan, and for the southern border. And then the president has also put forward a $56 billion domestic supplemental as well. And we still have other things to get done in Congress before the end of the year. So that speaker fight is now kind of playing out. We're starting to see the first steps here. The new speaker, Mike Johnson, has put forward a bill for Israel aid. He has separated it from the aid for Ukraine. So that is something that's already kind of creating some issues on the side of the defense hawks. But he offset the spending for Israel. So this is 14 billion, and he wanted to cut it with 14 billion for enforcement funding for the IRS. Now, this may not fly, partially because Democrats are opposed, partially because it actually scores as being negative for the federal deficit. But it shows where we might start to see more of these budget fights play in. And there's going to be an increased focus on spending offsets as we look at these spending bills, particularly because of what we've seen and what we've been talking about in terms of net interest costs. Back in July, net interest cost reached 14% of tax revenues. That means that we have now reached what we have historically seen as that inflection point between fiscal accommodation to fiscal austerity. And you're starting to see more pressure on how is the federal government actually going to pay for all the things that it's doing, especially if we're looking at even more spending for national security and for domestic issues. One of the things that we've been highlighting is that it's going to be important to see how does the bond market actually react to passage of any of these bills and whether or not they are offset with spending cuts or not, because we've particularly seen some pressure also coming from the fact that we don't have natural buyers of U.S. Treasuries anymore, but we're kind of moving into price-sensitive buyers, and that's putting increased pressure on Treasury yields as well.
Right. And so we're in this period where higher for longer interest rates is what the Fed is saying. There's additional pressures outside of the Fed on the long end of the curve. As you mentioned, some of those natural buyers might be pulling back a little bit. So the debate in the near term about offsetting some of this spending, is instructive of the bigger picture of austerity coming to Washington. But even zooming out further, what might that look like over longer periods of time? Where are the big battles that might happen over the next 3, 5, 10 years that investors should be on the lookout for?
Yeah, because one of the things that is important to keep in mind is, so we do have a current budget fight that's coming up, but we do also have these other geopolitical pressures. So that could move policymakers in a couple of different ways. If the pressure is strong enough, that means we may not actually see spending offsets in the near term. But as we move into the future, the pressures are only going to grow. So if things aren't handled in the near term, they will be handled at some point going forward. The 2024 election is probably going to put a little bit of a hamper on this because policymakers tend to not want to impose austerity ahead of an election when they're looking to get reelected. So what we could be seeing is more actions happening in past 2024. Could there be tax increases? Could there be more spending cuts? And that's what we're really watching for. This new speaker also is someone who is supportive of entitlement reform, and they are going to form a bipartisan debt commission to look at the fiscal debt and try to come up with reforms that might be able to move forward to, shore up some of the entitlement programs that we have. And that is something that we could also see post 2024. The other thing we're kind of always looking out for is the end of the individual tax cuts that were enacted under former President Trump. Those expire at the end of 2025. And so while Republicans and Democrats would like to keep those tax cuts in place, the fiscal pressures that might be imposed at that time could make it more difficult, or there may need to be more offsets in order to keep those things in place. And so that's where we're watching, where maybe you could see some changes in terms of tax policy, in terms of spending cuts, things that may be not happening this year, although you may see that, but particularly after we get past the election, we think that that's going to be even more the case, particularly as it's going to not be easy to actually bring down net interest costs as a percentage of the federal budget, particularly if the Fed does keep rates higher for longer. There may be more pressure for them to cut sooner than they normally would because of this fiscal situation, but all of this is going to continue to ramp up, and it's going to be an important part of the policy debate in Washington for the years to come.
Yeah, certainly, as you all have been writing about, feels like a regime change from the last 25 years to whatever we have going forward of more fiscal austerity, higher interest rates, and pressure on policymakers as a result. So, Jeannette, we'll definitely have you back before then to talk about it all, but thank you so much for the time and hope to talk soon.
Thanks, Ross.